when speaking with investors, and Andre, you've already answered this, do you find that investors are really focused on the sector themes such as spot prices or the Russian invasion, or are investors still keenly attuned to what you're doing internally with your company? Why don't you kick it off for us, Keith?
I think, David, it's interesting. If you look back to the last quarter of 2020, we really saw the uranium equities take off, whilst the uranium price sort of just tracked sideways. And I think when we did our first equity raise in February last year, we were very, very pleasantly surprised with the investor uptake. And I think the story has broadened. When we did that first equity raise, we raised $140 million from essentially 25 investors. When we did our last raise in October, it was $150 million from over 60 investors. And the way I judge the spreading of the story is that I'm getting a lot of inbounds from generalists. I'm getting a lot of inbounds from journalists and retail. So I think, maybe pre-2020, there were a few folk who had conviction and saw the story early, but I think that story has now spread and there's a lot more generalist interest in uranium and in the nuclear sector, which I think is a positive.
Mm-hmm. Yeah. Sorry, Keith, did you want to comment on that as well?
Yeah, I think Andre's spot on there. I mean, I've been involved in the uranium industry probably the last 6 or 7 years or so. And I would certainly say that when I started there, uranium was perhaps a little bit of a dirty word in the investor space at that point in time. It certainly has improved significantly over the last couple of years or so. And I mean, obviously that's on the back of the carbon emissions and zero carbon targets and all that kind of stuff that are coming through. So I think there's been a shift in terms of the mentality of the various people going forward. And I think once you've got over that hump, you then start to get the investors looking specifically at what you can provide within that target or within that part of the market. And I think, like most investors, they're looking for the lowest risk option going forward and all those types of things. And those certainly are the questions that have been asked of me. 2-3 years ago, it was about the market, and I still get questions about that, but there's a lot more questions about the project and what we're doing to de-risk it. When are we going to bring it online again? How are we going to manage things like transportation? How are we going to manage things like inflation, staffing requirements, all that kind of stuff are the questions I'm normally getting asked now.
Anybody else would like to chime in on that? Whether people are asking questions about the sector or your company specific?
I think, Dave, that we're still, because you've had all these false starts, like we've all lived, for those of us who've been around longer, we lived through the whole 10-year, and it's pretty extraordinary to have a 10-year bear market and anything. And so there were a lot of false dawns in that 10 years, as you know, and where it looked like the supply demand dynamic that existed in that little space was enough to sort of propel it out of the bear market and into a dynamic where you'd be caring about, okay, when are you online and when are you going to morph from being an asset kind of base valuation to, a cash flow driven more model, and these projects are actually going to happen. And I still think, because this last little downdraft wasn't helpful with that, and I still think there's a little bit of hesitation until we see that stability, maybe until you see some actual action out of one of these governments that kind of pins a floor price someplace, or by the utilities being more overtly saying, we'll pay 50, we'll pay 60. Until you see that, I think it's still going to be more the U price, spot U price particularly, is probably going to be more a driver for the stock performance, to be honest. I mean, it shouldn't be that way, but it is.
Yeah, and Mark, you mentioned shifting to cash flow. Over the past several years, I think you're transitioning from Westmoreland in Australia to projects in the U.S. Right? Is that really a cash flow driven decision? Are you planning to focus on your conventional or ISR assets first?
Well, no, I think we'd obviously build stuff in the sequence that made the most sense, because from a cost of capital standpoint, it's relatively easy to get an ISR project up, and I think it provides support for doing other things. And also the permitting is just set up that way. Like, we're well ahead because we have the NRC permits and what have you in the United States. We just need a couple of permits. But I mean, the other thing that the investor class needs to understand in something like this, even amongst the developers, the development timeline in uranium is way longer than anything else, just because of the permits that are involved, the nature of the projects, the fact that you probably really have to have a bunch of the financing for these bigger projects underpinned by actual utility contracts. It just means the thing is more the timeline is more protracted.
Right. And Pine and Richard, news flow has been pretty quiet over the past couple of years for Forsys. Do you think that you will be able to get into production during this cycle? And if you do, what's the largest risk you're facing? What kind of price environment might you need to move forward?
Can I take the first bit of that question, if I may, David? We have intentionally been relatively quiet recently, simply because we were keen to get these studies underway. We know there's even more compelling information coming out about the company, but what we didn't want, we wanted to keep our powder dry effectively until we had this information news flow coming through, which we think is going to be hugely substantive towards how people react in the future to Forsys. So therefore, what we didn't want to do is come out with just sort of imaginary news flows, which we thought was everybody's waste of time. Now we are putting our foot on the accelerator because, just as Pine has said, there's been a huge amount of stuff going on in the background. And your point about sort of how long is this sort of sector run bull going to last for? I think given the way that the widening of the supply demand curves that we see, it could be for a substantial period of time. With regard to getting into production, I'd like Pine to jump in on that. I see it very, very positively within, on the basis of the reviews and studies that are going on at the moment. But I would like Pine to take over on that.
Yeah. I think, from the work that has been done, we've had a very solid foundation and an extremely good database to take the project forward. So we've already started with the gap analysis, and it's my view that we would be able to sort of produce an updated study within a 6 to 9 month time frame. During this time, we will double process or parallel process the mining license application for the number plus component, and that is needed to kick in sort of 4 or 5 years down the production line. A project like this to get it really constructed, 24 months, so I think within the next 2 to 2.5 years, this project could start construction and start getting into production.
And David, if I can just add to that, it needs to be noted also that whilst we have the Valencia permitted license already under our belt, which is a huge advantage, we've also got a significant amount of the infrastructure in place too. And so, even though the people in the infrastructural world have changed during COVID and so forth, the contract still exists, and the company still exists. So this is hugely important too.
Right. Okay. I have another question for Andre here. Now, typically physical uranium companies don't have the same level of risk as other companies in the sector. That's sort of key. But did the social issues in Kazakhstan earlier this year spook some investors as to risk of getting product out of the country? And now, because of the Russian invasion, pretty much the same thing. Cameco has had trouble getting physical delivery of its JV pounds from Kazatomprom. So, what happens if your delivery doesn't turn up at the end of the month?
Well, we took a delivery about 2 or 3 weeks ago of 2 million pounds from Kazatomprom. So that went according to plan, and I have no doubt that we will get our next delivery by the end of the month. Typically the way it works is we don't pay in advance. We either pay after the book transfers happen, or we pay via an escrow arrangement. So when we enter the deal with Kazatomprom, we agree a delivery schedule. These pounds were really from October last year. We run price risk as do they, but we don't run credit risk because we don't part with the cash until we get ownership or via an escrow arrangement. I think the supply chains are being challenged and are getting challenging. But the only my only point is really that a couple of weeks ago we got our delivery exactly on time and schedule, and again the delivery that's due end of this month. I have no doubt that we will get it.
Okay, thank you very much. Question for Keith here. Can you give us an idea of the benefit of returning a past producer to production? Are you going to need offtakes? And really the key focus there is reducing costs. Can you maybe elaborate a little bit on what you think is most important? Is it grid connection, ore sorting, acid recycling?
Yeah, so I think one of the other members of the panel mentioned this about the financing side of it. I think there's a couple of options ahead of us, and I was at the Montreal WNFM conference 2 weeks ago talking to a number of utilities and talking to some traders as well. So I think if we were to follow perhaps the Boss Resources or the Paladin route, we could raise all the capital that we need through equity. And if we decided to do that, I don't think having contracts in place is that critical for that sort of raise. However, if we did decide to go down the debt route, obviously contracts are more important for us to be able to do that. I personally think we're going to go down a mixed route. I think we're going to be looking for probably majority equity, but we will be looking for some debt as well, and therefore contracting is going to be important for us moving forward. That's why I see that at the moment. And then to answer your question regarding benefits of having perhaps a past producer that's an existing asset there, I think there's a couple of great things that we've got at Calaquera that maybe help us. First of all is that we've already got 1.6 million tons of ore sitting on a ROM pad. So when we start the plant back up again, our ramp up curve is not dictated by the mining issues. We're straight into the plant. It's recovery, it's throughput in the plant that is going to dictate our ramp up. We already know, having spoken to a lot of the operators that previously operated the mine, and we're fortunate as well in that a lot of the previous operators, the metallurgists, the plant operators, the mechanical guys, they're already contacting us wanting to come back to work at Calaquera. It appears it was a very, very popular mine to work on. It's got a great camp, easy in and out facilities, good rosters on it and all that kind of stuff. So with regard to some of the debottlenecking issues or maybe some of the commissioning and ramp up issues, I think we've got a plant that's already been debottlenecked. It's got a plant that's already been commissioned previously, and we're going to be able to put a team that's already done that work for us as well. So I would think that our ramp up time for the plant will be relatively short time frame as well. I would say also that in the current environment, when you look at inflation and all those types of things, perhaps a greenfield project might be exposed to inflation more than an asset like ourselves, where probably most of our refurbishment costs are related to some concrete work, anti-corrosion work, some equipment replacement, but not significant equipment replacement. So most of our costs are actually associated with services rather than capital purchases, which I think in this high inflation environment is probably a benefit for us as well.
Okay, perfect. Well, with that, I want to thank everybody for a great discussion this morning.